Hi dear traders, today is Friday, December 3rd, and as usual, I'd like to share a fresh market review prepared specially for InstaForex. What happened recently? Janet Yellen cares about tariffs on Chinese imports. I'm interested in the viewpoint of the US Treasury Secretary. The S&P 500 is making an upward correction following a slump of 20,000 points. This downward correction is rather normal for the recent year that feeds into the range of 15,000 to 30,000 points. The index is able to tumble deeply and rebound afterwards. Savvy investors know how to take advantage of such moves. I hope you also know this. Let's start with gold. Nothing new has happened. Yesterday the price broke the double bottom. The overall trend is still bearish. There is an interesting target for gold. This level has been tested a few times. The price might approach this level soon. Personally, I wouldn't trade gold downwards in this zone because the market is extremely oversold now. Lately, the price has been moving in the zigzag pattern, a lower low and a retracement. This zigzag can erode your deposits, so my advice is to stay away from gold. What about the euro-dollar pair? I recommend it considering long positions from 50% Fibonacci level. I have spotted a non-standard impulse on the chart. What does it mean? A standard impulse that tracks a trend looks like this. Such impulses occurred on November 26th and November 29th. An impulse was followed by a retracement and a third wave. The fresh impulse is non-standard because it hasn't broken any trend. It looks like a fifth wave. Since there is an impulse, perhaps we could try hunting for stop orders of sellers. I assume that sellers have set stop losses at these levels, and I'm plotting now. I mean, we could try trading the pair upwards. Something hampers this growth. American traders were selling the euro-dollar pair for 2 days, and as a result, the pair went down. They highlight today the US non-farm payrolls on the first Friday of month. Congratulations! Today the market will trade with higher volatility, so the pair might be pushed either up or down. As we are working for a 50% retracement, a stop loss is set 60 pips down and a take profit could be 90 pips up or even higher. Well, this is a common trading idea that you frequently practice. All in all, I'm for long positions despite selling activity in 2 American sessions. Nobody knows what the non-farm payrolls will show. Such reports can be unpredictable and I would prefer to see the upwards move, but if we place a stop loss, we will close positions. Now the price is in a close proximity to the old extreme of 2020. Silver is extending weakness, nothing interesting. Yesterday it formed a pin bar, and if you already bought silver, you reckoned a 3-wave structure. But that structure was ruined. This price action doesn't favor long positions, and I would recommend cutting long positions and see what will happen at lower levels. So we could open new long positions at a fake breakout and enter the market at retracements. The pound sterling plummeted following Powell's testimony. The Fed leader intends to terminate the QE program earlier than expected with bigger cuts in bond purchases. That downward impulse could be a climax. If the US employment data is worse than expected, we could see an upward reversal of the pound-dollar pair. There was a mirror level which was wrecked by Jerome Powell. If the sterling rebounds, we will be able to earn nice money. I see great targets for the pound-dollar pair. At least we could try using some parts of a deposit to buy the pair with such mega targets. Meanwhile, the pound doesn't look firm. Nevertheless, we could plan some long positions like for the euro-dollar pair. From my point of view and the point of my strategy hunting for stop orders, the sterling doesn't suggest proper targets and it's just going deeper and deeper. I see some preconditions that selling pressure for the sterling could be stopped. The US dollar might also get weaker. So, in conclusion, let me warn you about crucial news from the US, such as unemployment, a jobless rate, and other data on the labor market for November. It will be funny. Anyway, volatility will be very high. It doesn't make sense to enter the market with tight stop losses. You can trade with wide stop orders, you can trade during a news release, and you can trade at a retracement immediately after news.